All right. So this is probably going to be a quick webinar. I don't know if anyone has registered. I'm going to wait for a couple people to show up. How you doing, Herbert? Thanks for coming in. So, yeah, if this is your first time on, again, my name is David, right? I'm the school group, what's it called? Founder, right? I created Tradeline Secrets. It all started in a Google Drive. And yeah, this is going to be a different format because I used to do it differently. Um, But anyway, I'm just gonna wait for a couple of people to stop in. If you have any questions, by the way, just drop them in the chat, and yeah, I'm happy to answer them. And also, if anything regarding your situation as well, like if you want to put it in the chat, like let me know. It's the best way to actually go ahead and use me because like when it comes to credit concepts, I can talk about them just like all day, basically, right? But doing that doesn't help anyone because it's just gonna overload you with information. And then also, if it doesn't even apply to your situation, then I can tell you exactly how to unlock um, like the high limit loans, etc. But if you're just not even in that situation, then the information is completely useless, right? So that's my little TED talk on asking questions and how to the best way to go ahead and use me as a resource, right? Um, and also, if it's just us, then it's fine because regardless, I'm going to be posting this recording in the group since there are some updates. One of the first things is like these Zoom calls are going to be moved on to school for one. So that's the first thing. And then while we continue to just kind of like hang out, I'm going to show you the actual like free school group. Oh, sorry, I was working on some work. Hold on. Here it is. Okay. So one of the first things you want to be doing is going into the start here section where it says how to win here fast, right? Because okay, I think there's an error with school because that's like I don't know why that keeps happening. Anyway, hold on just a second. I really want to see if there's an error. Is school down? I'm gonna have to clear my cache and cookies. That's so annoying. Anyway, let's just work through what we can work through. So basically, you're gonna want to go ahead and go in here and read this and do watch this video. Basically, what that is under the Fundable Business Blueprint, under how to use the Tradeline Secrets AI. That's what that video is, and and basically, it's step by step on how to set up a fundable business, right? So let me go ahead and actually pull up a chat real quick to show you. Hold on just a moment. Where is it? Oh, there it is. Let me do this. Example. Okay. Let me go back to sharing my screen, and here it is again. So, as you can see, you can, and by the way, remember this is AI. You don't have to use the prompts I use, but it's just to kind of show you like how to like use the AI and again, just ask it like questions about your situation. So I put, I have a business. What do you need for me to see if my business is fundable? And it's just gonna go through and start asking the questions, right? And this AI specifically has this full guide here. Obviously, like you're gonna want to go through it, watch some videos, take notes, but then for actually executing the information, that's how I like to, that's how you should use the AI. Because then it'll tell you, like, it'll just go through it, right? It'll say, like, yeah, do you have an LLC or corporation, right? Do you have the EIN? If not, then this is what you do, right? But, like, for example, I said here the addresses are mismatched. It tells you why that's an issue and how to fix it and where to go, right? Um, and then same thing, I'm telling it like, oh, one's a physical address, the other one's virtual. Then it's gonna go ahead and tell you again why that's an issue, right? Like this isn't something you want to do for the setup. And understand, by the way, that the AI, when it's going through your business setup, it's specifically creating or really analyzing it in the format as if it's a loan officer, right? So if you have questions about What are the tax implications? What are the consequences when it comes to like liability? What if I get sued? All those things, it won't be able to help. And also the setup is not, it's not an ideal setup for that. All those things you're gonna want to talk, like if you are, if there is a serious concern about that, talk to an attorney or an accountant, right? But generally, a lot of times you don't even need to worry about it. Most people's businesses aren't that complicated, right? But again, if you do have those ish like those concerns, then that's what you're gonna want to do, right? Uh, now, anyway, so it's gonna tell you like, yeah, this is what you need to fix. This is how you do it. So at least for this and the EIN, if you have a bad address, you use this form here, right? Or you can call them, or you can file a tax return. Okay. And and there it is, right? So now, like for example, I fixed everything now. Uh, what else do you need to know now? I'm fixing the addresses and EIN. And it'll tell you, is it going it's a startup, for example, and you just keep going through it, right? So like look, you see how it had you at a tier and now it based on all that it says, "Oh, you're tier 5 actually now." And that doesn't mean tier 5 is bad. Actually, tier 4 is the one that you do not ever want to be in, okay? But basically the reason why is because it's a new business, right? I said it's a startup and I'll still be putting money in the bank. You can still fund startups, but it's going to tell you now what you can do to basically get into the higher tiers. Now let's just say, for example, oh, okay, so, okay, got it. Say my business ages into 2 years old and revenue. So you see how it talks about the tier progression sample, and there it is, right? But again, it'll go through the actual situation of like what tier you're in, what it means, and all that, right? Now, how can I get funded? And you just keep going through it. And again, at this point, once you actually do the setup, the funding piece, you have a couple different options. Like I always be posting in the free group everything that you need to know about funding and how you could potentially get the funding as well, right? But again, that is the core thing. That is the main thing you're gonna want to be focusing on though in the free group, right? Is using the AI to get to actually see where you're at, right? And if you don't have a business, you especially want to use it because I talk about how to register a credible business. So you don't even have to go through the like fixing the business. The only reason why I know how to fix a business is because that's what I did for mine, right? That's how I learned all this back in 2020. I actually spent the whole year building up a Paydex, and at the end of it, I found out you didn't even need a Paydex, right? And I go into that here. And again, I even have the Paydex like credit vendors if you really want to build one. It's not required, right? But all of this, like if you and we can look it up, like the lendability platform on is what it's called. This is what people are being sold, right? And there's nothing wrong with it, but it's like $700 a month to do all this, right? And basically, again, like all this information, where is it? There it is, right? One-time payment of $3,000. And that's what I'm saying. And so when I literally tell you guys that my free group is worth $3,000, I'm not joking. You know what I'm saying? Because if you go here, it tells you like the fundability platform is 497 or you can pay $3,000, right? And all it does is it builds business credit. Oh, wait, 404. Okay, they're not really posting about the back end. Anyway, it helps you build your business credit, right? And I just show you guys how to do it for free. And then regard and again, the reason why I do it for free is because it doesn't get you funded. None of this like if you do all this at the end of it, you're not gonna get funded because what you need to do is actually do this. This is what matters, right? Anything outside of that, you're gonna get auto declined, right? Maybe approvals uh, is this. Sometimes a file can still qualify based on a couple accounts. For example, I had a client that they had, I think, multiple, like two mortgages and an auto loan, and then like two credit cards, right? And most people are like, oh wait, that's an auto denied though because you need to have five credit cards. But because I have the underwriting experience, the knowledge, I know it's actually a better deal because they have the mortgages, right? It's like not many Americans have a mortgage, let alone two. And so if you have two perfect payment history mortgages, an auto loan, and then two credit cards, like that to me is a deal and I can get it funded. But there's people out there that, you know, they stick to this, but point is, it's all about the credit profile. Paydex isn't going to help you at all. And then, of course, you want to update your info as well. So incorrect addresses, employers, etc. You want to remove all that, and that gets you funding ready, right? That's actually how you get funding ready. And then I talk about some of my favorite cards here as well after. Okay. And of course, once you're done, like you can continue to be in the free group. I still post things about credit, right? And then I'll even go as far as showing you guys the website that I use to learn. Literally go to myfico.com, go to community, and then just start asking your questions. Okay. There's, what is that? 5 million posts for you guys to go through and read. And that's how I learned the fun. Okay. So it's not like there's secrets. The issue is that there's a tons of information. It's everywhere. And the way that I figured it out though is by testing things, right? I just went and tested stuff because you can literally go like bank data points, right? And like it'll show you everything. Um, here, let's go here. Mm. Yeah, and that's part of like reading data points, by the way, because like people think like, oh, this is actually like a bad piece of information, but the reason why it's good to know declines is because then you just don't do the things that get you declined, right? And that's part of like the learning on your own thing. Like it'll like I would spend time reading this, taking notes, and this was 10 years ago when I was 21. I'm 31 now, but this is how I learned, and this is the website that you use, and all you do is you just read through this stuff, take notes and then once you're done with your notes, you go and do the thing, right? Um, so yeah, that's for people that really just don't want to pay and do it themselves, you know? So it's like, okay, then just go look up the data points and read, right? Like it's everywhere. And then once you're done reading, then just go and do it. Like that's what I did. You know, people were like, "Oh, you shouldn't," but then I just did, you know. Some data points for utilization. You see, this one talks specifically about utilization, right? And that's the stuff as well as like about the underwriting knowledge, right? Because people think high utilization is just auto denied, but I know how to work high utilization and figure it out, right? And it tells you here, right? So this is the file context, and I believe they still might have gotten some approvals. Over the last month, I paid off almost everything. One personal loan. Yeah. Anyway, that's basically what I would be doing when I was like in yeah, when I was learning everything, right? Early exclusion. Hold on, this is a better one. Oh, look. Oh, you can also do this. Data points, business cards, because like that's right now what everyone's like talking about, right? Oh, and then FMBO. You can like target specific. Oh, here it is. Business credit card data points updated. This one's actually kind of good, but you see, like this is like the stuff that you would have to do and read um and do all that, right? The only difference is that in the free group, I literally will be posting every now and then. Like I talk about the trifecta account opening process or how to get six-figure funding effectively, right? And this is the free group. This is what I'm talking about. Like if you actually go in and read what I post. It's just all the stuff that I believe, well, actually that will get you funded, right? And so your options are basically using my FICO, figure it out, or wait until I post some stuff and then just notate the patterns. And the difference is in VIP, everything's just centralized. The only reason I don't post as often in the free group is because like, well, these people are paying me, right? And so I have to follow through on that promise more than like free because it's free, right? Like I can just, well, it's like there's nothing to be expected. It's like my time, it's if I even want to in the first place as well. But um yeah, and that's basically like tr the free group in Tradeline Secrets. And if you just hopped in, I was telling Herbert here that um, what you can like the format's different. Right now, I'm just kind of freestyling everything. But if you have any specific questions, the best way to actually use my knowledge is to ask me specifically about your scenario, right? Because I just know tons of different credit concepts that others don't. And so I can just talk about all sorts of different things for hours. I can talk about example scenarios, but none of that's actually like useful if it doesn't apply to you, right? Um, so Herbert, Randy, I don't know if you have any questions as far as like how you can maximize using the free group, right? If not, I'll just probably go into what's it called? The new updates because like basically I'm gonna be moving everything onto Skool again, right? I was doing Zoom calls and I gotta update a couple things here. Um, I guess what I can do for you guys is show you something. You can go in the new updates. All right, I'm gonna what I'll do as a bonus, since it's just the two of you guys, like I'm gonna record it, but and everyone else will get in the free group. But I'll show you like a quick example of like the fundamentals of credit stacking. Okay, because I think if you understand the general fundamentals, you'll notice the pattern of everything. And this is the actual VIP group. Okay. So basically, this is how you credit stack, and I'll read through it, and then we'll talk about it. I got more work to do on the credit side, like age and utilization. Okay, that's fine. Utilization. We'll talk about age here, in a sec. Well, yeah. Well, here I'll address that, but first let me go ahead and go over this because this will actually help in both not only the business side but also personal. And then you can if you understand how to do this, then you can also use this strategy to not only, of course, like get the 100,000 or whatever, the insane amounts that people promise, but you can also use it to like build your credit or rebuild your credit, right? Because it's just if you understand that credit is just one big pattern, then it's like one primary pattern that I found that applies to like literally every single product. And so anyway, it's credit stacking, right? That's the actual skill. And then when it comes down to it, like what is it? Well, really, it comes down to a couple factors. So what bureau is getting pulled? The underwriter that's being used, and then documentation thresholds, right? That's how I'm able to tell people like, hey, this is a no doc product, or we're not going to be requesting financials because I know where every single lender is at on their thresholds. And typically, if you're curious, some banks are very conservative, so once you hit the $50,000 mark, anything over 50,000, they're always going to be asking for tax returns, etc. Or sometimes the mark is 100,000, right? And that those marks apply to not only business loans but also credit cards. Auto loans is different actually because it's gonna get collateralized with the auto, but like even personal cards and business cards, right? A lot of times the people that are getting the $100,000 like credit cards or more, it's because they have tax returns, right? They're not doing that just like oh, here you go. Like that's not how it works, you know? Anyways, and so basically, so some places they share underwriters. For example, Elon Financial, they're the largest underwriter. US Bank actually it owns Elon, right? Elon underwrites mainly for a bunch of credit unions and then some regional banks, right? And the reason why that's important is because most people, they're always focused on the inquiry. Like, let me look at what inquiry they're pulling from, right? But it's like, okay, you may have avoided the same credit pool, right? If bank A pulls from Experian and bank B pulls from TransUnion, yeah, good job. You avoided the credit pools, but then you forgot to factor in that both of them use Elon. So the application will still get looked at by by the same underwriter, even though the credit pool is different, right? And if you do too many apps with the same underwriter, typically anything more than two, then that's when you start to get auto denials. And then in more like, let's say like Elon is thinks it's a more serious case. Let's think because like if they see like a bunch of applications, it could trigger like a fraud flag. And in those cases, if it does trigger like a fraud review, then a lot of times they just shut down every single like credit card account, you know? Boom. So that's my TED talk on underwriters. What was it gonna company like 3 months old, is being worked on both personal and looking at, yes, okay. No, I like that. So then this is gonna help you with setting up your first stack, and then I'll yeah, we'll continue talking more about like yeah, just getting people ramped up. Anyway, now bro, I kind of already went into the rotating bureaus, right? Why it's important to do that. And it's again, it's so that your applications don't get flagged. And then I also went into documentation thresholds a little bit, right? Why that's important. And it's again, because you can avoid the automatic denial flags, but then you can get flagged for financials. And then in that sense, like if you get flagged and say you're not able to provide it, just don't provide the documents. Just move on. You know, people always get concerned. They're like, oh, what if they request it? Like, do I have to provide it? It's like, no, like you just ignore it and move on, right? So, um, definitely don't do that because then like if you're giving docs that are altered, you know, yeah, not a good deal. Don't do that. So this all can take about 60 days, right? It really depends. Like 45, 60 days. You can keep it going, right? The seasoning phase, basically, these are extra things that you can do, right? Um, and then the soft pull, that's basically a way that I test profiles. And then here I talk about PG versus non-PG, right? And that's how easy it is to credit stack, right? I'm not gonna go, well, I'm gonna show you as well now an image, but like it's not hard, okay? The only thing is that people like to come to me or talk to me or like basically do everything with me because I can just look at a file and I just know like what to do. That's literally the only reason why people hire me, right? But as far as like everything else, it's like, dude, you could literally just go to my FICO, do everything, on your own. But that's why people hire me though, so they don't have to like just be all alone and figuring it out. But anyway, so let's take a look at the actual, oh shoot, did I mess something up? All right, cool. So again, that's what I was saying. Credit bureau pool, underwriter use, documentation threshold. And here was like an actual visual of like what it looks like. So banks A, B, C, shared underwriter, right? They have the same apps, denial. Okay. So that's why we don't do that. Application order matters. Experience going to be your main bread and butter. TransUnion's your your backup. And then Equifax, if Equifax is the only bureau that's clean, then you're probably gonna get only like maybe two or three approvals. Like no one uses Equifax, right? So, and then that's how I get people funded because like let's say they have a bad Equifax score, like they have collections, but nothing is here, then I'll be like, okay, let me just do Experian and TransUnion banks. Or say Experian and Equifax are both burnt. I'll be like, let me do TransUnion banks only, right? or if both are burnt. You see what I'm saying? That's how you do it. And like if you notice the pattern, it's literally just building blocks, right? And that's how I view finance though, because I've been doing this for so long. The moment I see couple I just build things. And that's how you work a deal as well, because like if one building block isn't there, sometimes you can substitute without it and still get the deal done, right? Other times it's just too many missing building blocks. Okay. Um, but yeah, you see, it's not hard, right? Again, the reason why people do this though is because like, well, for one, I've been doing it for 10 years, so I just I can like look at a profile, I can chicken scratch things on a notepad and I can build a stack just like that, right? I don't, and there's people, and I'm not saying like it's bad to have spreadsheets and all that. Again, it's just like with time, you just get good. But like when I first started, I would have spreadsheets, everything, and I still do. I still have those things, right? Like, still have that stuff, but you know, pretty easy. Now, um, I kind of went into that, fixing your profile. Okay. Now this is what I was talking about, the soft pull strategies, right? If you're ever in a position where you're not sure if you can get financing, there's not every single lender offers soft pull credit checks. But if they do, I typically go there just to see if it's even something that can be done. So like the most common one is like getting an Amex pre-approval or seeing if you're pre-approved with like a Chase auto loan, right? And if you're seeing positive results, then you're most likely going to get approved for whatever product you're going for, right? Um, and that's like the soft pull strategy, right? Business funding here, like yeah, I talk about why you have to have good credit. Again, a lot of people that goes into the whole paydex stuff. I'm not gonna really go into it. Like, just understand this is the stuff that you want. Okay. What else? Common denials. Obviously, the most common reason people get denied is just they have collection accounts and things like that, right? Of course, high utilization, but yeah, that's what that means. Where is it? Funding rounds. I think I have, you know what? I'll show you guys the actual personal credit card stuff. I don't, so that way you can see it applied because that's more the general concepts, right? Um, Here. This is for personal credit card. And by the way, this credit stacking pattern came from personal credit cards. So, the repeating pattern again, it repeats. Products change, but the pattern stays the same. That's like the key thing, right? It's still the same thing, right? We're still looking for underwriters. So bank A, bank B, same risk engine, right? Bureau rotation still matters. You still want to rotate your bureaus, okay? Relationships matter. And then this is a new concept actually. 'Cause I didn't go into the relationship banking. I did go into it. I remember how I pulled up the trifecta post and I was talking about the bank accounts and all that. That's what I mean about this. I use relationships more than like going to an actual like business banker because like it doesn't matter. Like the at the end of the day, if you don't have the specific credit profile, the right accounts, etc., doesn't matter how good the relationship manager is, they're not going to approve you. They don't care, right? Like it's just math, you know? Um, Anyways, I like heavily relationship driven banks is what I go to. So if you have the checking account, the personal checking account, the personal savings, and say even a credit card, and then the business checking account, I will take you there first before I ever go and say like, let's go open this account here. Because again, it's all about the relationship and your credit score. So deposit activity, right? I look at like the deposit activity, what it looks like. And that's something that other people don't do. This is specifically what underwriters do. Like if they ever ask for financials, they're analyzing your cash flow, right? And it's not hard. You literally like if there's more than like what you spend, it's like that easy, right? But point is, that's what I do. The soft pull strategy, this is what I was talking about for like thin profiles. Amex is the most common one that I use to see it, like what it kind of looks like. Again, I don't accept the offer, right? I just want to see if they're giving offers. If they are giving offers, then I will feel confident with a file that is th quote unquote thin and take it through, right? Now, again, personal credit is the foundation. It leads up to business, right? Ideal personal credit profile. The requirement on personal credit is also more lax. You can be as low as a 650, I believe, right? You just have to have the right accounts. The fundability check. So underwriters evaluate the depth of the primary trade lines, right? The age and limits of accounts, utilization, credit mix. I should have added also the bank relationship, right? But that's okay. That's kind of like what this says here, the depth of the primary accounts, right? Authorized users we'll get into. Don't worry about that. For sure, like to keep it simple, for business funding, authorized users don't help. For personal, I will tell you how it helps. Not right now, but like later on, right? When I get to what's it called? Herbert's situation here. Because like that, like what he explained, I can work with that. And I just want to show you guys. But look, this is actually going to be really cool because then you're going to be able to see the stacks. So how the stack comes together, right? So Bank A pulls Experian in-house underwriting. Bank B pulls Experian Elon. C TransUnion TCM Bank. TCM is just another underwriter. Bank D TransUnion FNBO. Bank E Equifax Elon. And you're probably thinking, wait, hold on, didn't you say not to use Elon twice? And again, you'll see here the general rules. Max 3 inquiries per bureau. Max 2 apps per same underwriter. Shared bureau is acceptable. Shared underwriter is limited. Okay. You can push it, by the way. You can definitely be more risk adverse or more risky and be like, no, I'm gonna keep going. Just understand that out of the hundreds of applications that I've done, w- like clockwork, once you get to the fourth, you are most likely gonna get an auto denial. Okay. So I like to play it. I like to get my wins, and that's why I follow my rules. Now, application order, right? Um, Really is up to you, but like you start with your experience, TransUnion, Equifax, right? Oh, and here was that rule, the aggressive limit, 4 to 5 inquiries, right? Possible, but increases your risk of denial, right? And the only reason why you would do an aggressive play like that is I've had people where they're like I know you want to do a credit sweep and all that, but it's an emergency. I need you to like just execute, David. So I'm like, okay, just understand that we're probably gonna get some denials, but if you want me to be just like super risky, whatever, I'll do it, you know? And that's when I would go up to like the 5 limit mark, because I'm being risky. But then there's like the gold standard again. Where is it that it does the oh yeah, actually this is good to know. I actually already talked about bureau arbitrage. Um, oh, I talk about how, yeah, here all the core mechanics apply to all the loans, right? All the different products. Um, this is how I created the hybrid stacking, by the way. So you guys are getting a lot of sauce, by the way. So there's a way to pull multiple products with one hard inquiry. Okay. The way that I do it is once I get like the approval, you just ask them if you can get the other products, right? I'm kind of speed running it, I ain't gonna lie, because I want to just mainly get to the actual sauce. Where is it, dude? Hold on. Oh, here it is. So this is what the actual stacks look like. You separate it by bank, bureau, and then it should have the underwriter, but that's basically how you separate them out, right? Here, let me see if I can get you an actual. Oh, dang. I'm gonna have to go back and fix this. Anyway, but point is, if you were to have like not only the bureaus but then also the different what's it called underwriters, you would see how it all mix and matches, right? Again, building blocks. So it's just repetition. You just got to keep going through it, And I'm gonna post this online. Like I'm gonna repost this in the group, and we'll see what happens, right? Now, for your situation, you said you got more to work on, like age and utilization. I have a startup company, 3 months old, personal credit's being worked on. You want both business and personal. Okay. So this is what I can do for you. So With utilization, there the obvious one is you just pay it back, right? Didn't mean to say that in a way to be condescending or in hindsight, but I still just gotta like tell people like, it's an option. So and the reason why is because what's it called? There's people out there like they really just don't know that they can just pay the things back like straight up. Now, another one is a bridge. You can bridge yourself. Bridging yourself is more riskier, but that's something that some people do if they can't pay back. Like, let's say they just like they're waiting on money, whatever the case may be. They're like, dude, I awesome advice, but I would have paid it off if I did have the money, David. Then in that situation, I'd be like, okay, how about we bridge you? How do you bridge yourself? Well, if you own properties, home equity line of credit, use equity to pay off the debt, right? Boom. Okay, I don't have properties. What else? Okay, the other option is a personal loan, right? You get a personal loan, pay off all the debt to below 30%. The ideal utilization is below 20, right? Once you're below 20, you're pretty much good to go. And then that's how you do that, a personal loan bridge, right? Now, say you're not able to get a personal loan, this is when it gets even riskier. I've done all three by the way, right? The last option is just going to someone and saying, "Hey, can you lend me the money to pay down my debt and I will get you back," right? And that the reason and at that point, like the reason why that's the riskiest is because I again, I've been doing this since I was 21. I've taken all sorts of bridges. And so I'm like super experienced with that. Like the largest that I've ever gotten lent out was my friend lent me $40,000, right? And he's like, pay me back in 30 days. And most people they can't swing that, right? But I'm cool with that because I know how if you were to give me that money and if I had a specific financing plan, I know how to pay off my debt, go and get the money, liquidate everything, pay my guy back, and have extra for my plans, right? Yeah, yeah. And so that's what it is. And so those are the three options with utilization. Utilization is always going to be the hardest and also the toughest conversation to have because also like it's just a money subject, right? And it typically when it comes to those things like it can be a little touchy subject, but that's what it is and those are the options, right? Um, if you go like the pay the debt off route, like just like I'm just gonna pay it back, then you're gonna want to focus on money making skills, right? When I was 18, um, that's specifically why I went into car sales because I was like, yeah, I'm gonna need to pay my way through some stuff, and yeah. Anyway, that's that, right? Now, as far as the actual age of the profile, there's a couple things you can do. Um, and that's actually how you can do the credit, what's it called? That's how you can get your the H hack, right? And this is how it works on personal. On business it doesn't work, right? But on personal, this is how I got $100,000 when I was 21 of like just a bunch of different cards. First I did like a mixture of these, but then I also had my mom add me on as an authorized user on one of her cards because like what this does, all these 10 like if you add these accounts, they're all secured accounts, right? Just understand that. But the thing is they're going to report as a primary. It's not going to show as authorized user or anything. It's going to report as a primary, but the issue is your age is going to be like 1 month because it's all going to be new accounts. So then what you do is you add like one authorized user or two at the most, and then it's going to age hack your credit profile and say, oh, this is actually a 5-year-old credit profile with 10 primary accounts. And then at that point, you can go get personal funding. You see what I'm saying? That's how you actually hack the algorithm, and that's how you actually use authorized users. Anyone telling you like, oh, add a authorized user so that you can do this, because they're gonna be like, oh, he has a $30,000 card or whatever. That's not how it works, right? What it does is it tricks it into thinking that your profile is actually like 5 years old or etc. And then you add some primaries to trick it into think, oh, and then he has 10 primary accounts, 5 years old. See what I'm saying? That's how you do that, right? And that's how you age hack your credit profile. Um, We kind of went over a lot of stuff today, I ain't gonna lie, right? Y'all actually got a lot wor more worth. I might actually, I think what I might do, I might cut out the whole part about credit stacking and have it only be for you guys because y'all showed up and I appreciate that. And like and honestly, that's the only reason why I went into the VIP stuff because I was like, you know what? Y'all were the only two to show up. Yeah, and I'll send you guys the recording privately or something, maybe something like that, so that y'all can just have it. Oh shoot, sorry, I meant to click in here. It's not built well to help me as far as being added as plans to make some money and just pay it down. Thanks to you. No, I got your back for sure. Um, but yeah, I guess like moving forward, by the like if you, I'm still gonna be doing my live calls. I'm gonna change this. Because like I had a consultant helping me, you know, I'm a very like it's funny how I talk to you guys. Like I tell like my audience everything almost it feels like, but I had a consultant helping me. Um, things just didn't work out, right? It is what it is. But I'm gonna move everything back into the calendar in school. So we're not gonna be doing the Zoom calls. That doesn't mean I'm not here to help. It just means we're doing it in school, you know? And then you can message me. I post a lot in here as far as like what goes down. I might also add a couple things. I don't know. We'll see what happens. But yeah, I don't if you need anything, reach out to me, right? For sure, like if you're in the process of building up your profile and things like that, this doesn't take a lot of work for me at this point in my life. It takes me like 2 seconds. So I'm happy to like answer questions, right? That's the whole point of the free group, by the way, is that you guys get funding ready, right? What's the selfish reason for it? Well, hopefully you upgrade to my VIP or hopefully you go to one of my one-on-one funding programs. But if you never do, at least y'all have a funding ready profile and you can go get funded with whoever you want. But that's the whole point of the free group, right? And then obviously there's always a selfish reason why, and that's the selfish reason is that ideally once you're funding ready, you come and get funding with me, right? Just gonna be honest. So yeah. Um anyway, I think this is good enough, you guys. I appreciate the both of you for showing up. I know it was only three of us, but I'm telling you, um, y'all got a lot out of it because of the things that I did. You know, you gotta eat also. All right, Herbert. Well, hey, let me know if you need anything, all right? And same with you, Randy. Let me know if you need anything, and I'm gonna hop off now, and y'all have a great rest of your day, okay? Bye.